morning, good afternoon, good evening, traders from across the globe, and welcome to the 945th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, these videos are geared to teach you the art of technical analysis for you to use moving forward, like for tomorrow, instead of for yesterday. We love to try to tell you what will happen tomorrow to the best of our ability using technical analysis. This video is being filmed on Sunday for trading Sunday night through Monday. That's November 12th, video 945 for trading through Monday. Now, what I just said was we love to try to tell you today what's supposed to happen tomorrow. This board is almost the same board as I showed you in Thursday night's video for trading on Friday. What I showed you was that soybeans, once again, was showing the top was in. I got in front of the camera and I said this: no matter what is on your mind, don't let the report coming out on Friday scare you, because fundamentals always come out in the charts. A big report's coming out in soybeans. This is Thursday night. Go short the beans, because that report is going to clearly be bearish. Now, OMNI was correct calling the top in corn. OMNI now feels it's time to call the top in oats and soybeans. Why not believe it? It was right with the corn. I don't ever interfere with OMNI. I report like I'm the reporter. I report the OMNI news. OMNI says, do this and do that, and don't get scared. Now, traders, this is really brazen, because you must understand there's a huge amount of reports coming out. Crop reports tomorrow. Friday is crop report day tomorrow, and OMNI says don't worry about the reports, because fundamentals always come out in the charts first. Just put your trade on and the charts will take care of us. So if you agree with the shorting scenario in beans and maybe oats, we'll see if oats sets up, then you need to take this trade and do your homework and see why you can trade right in front of a report if the charts tell you they're going to be okay. Traders, here is what that report said, and you'll see this right before your very eyes. Soybeans falls on boost in harvest forecast. They basically said that Oscar's right because the chart was right and this market's gonna crack. How about that? It's exactly what we thought would happen. So the charts told us that the fundamentals do come out in the charts first. Rock and roll. We do know this. Futures trading can be extremely risky and cause substantial financial loss if you do not understand the risks behind trading, if you do not recognize that futures trading is certainly not suitable for all trading accounts, and if you do not recognize a stop as your best friend, get up and run, because you're a dangerous person. Don't trade futures unless you understand these markets and the risks involved. All right, so what's on the board? Another red OMNI, and that's the ES, the DAX, and the Dow, the NASDAQ, the Russell, the transportation average. Traders, it's all about the 200 bar moving average, as it was Thursday night for Friday, as it is Sunday night for Monday. It's all about the 200 bar moving average, and I'll show you charts to make you understand why. Grains are ripe for further declines, absolutely, unequivocally. We were right about those beans, rock and roll OMNI. We were right about calling for corn 3 weeks ago, well, 7 weeks ago, now 8 weeks ago. Called for the top in corn. About 12 days ago, we called for the top in grains in general, everything but wheat. And now we're really starting to think that the wheat might have put its top in on Friday, so we're watching all the grains for more topping action. We've already officially called top in corn and soybeans and oats. Looking good so far on those calls. So, we expect further down moving grains. We know soybeans looks like it's put its top in, and the 200 bar moving average. Traders, the leaders, the transportation average, the NASDAQ, the Russell, the leaders that move first before the S&P and the Dow, they've all dropped clearly below the 200 bar moving average, but the S&P is still above it and it's right at it. It cannot stay there. If follow the leader is the game that normally works, and S&P is a follower, and the leaders have already gone through the 200, S&P is going to have to go through the 200 bar moving average, and that's what I'm going to show you in this video. If you like the analysis you're about to see, and if you like that soybeans top and call with a crack for 44.5 points on Friday, come on down to livewithoscar.com. Come to my free trading rooms and allow me to teach you how to be a better analyst. And if you're a great analyst, I assure you it's going to help you be a much better trader. Learn how to plan a trade before trading that plan. With no further ado, let's go look at some charts. Okay, traders, soybeans. Remember we called for the soybeans top, and then we were brazen enough on Thursday night to say you can get short in front of the report because whatever report comes out will be bearish. Look at that drop. It went straight down and came all the way to the 200 ball moving average. I say we get through the average and come down here to our target. That is what was planned since the head and shoulders presented itself. Now we've seen the reports come out showing that there's more grains than we originally thought, at least more soybeans, and down soybeans should go. You gotta love technical analysis. A round of applause for technical analysis, traders. The fundamentals always come out in the charts first. Next, Oats. Bear flag, we call it bear flag syndrome. Where are we going next? The 200 ball moving average, and it looks like we are on our way. Now, when we had the last bear flag, you see what happened? It broke down. Actually got through my OATMA, which was right here, continued lower, and is now heading towards the 200 bar. So now we've made another bear flag. So bear flag, breakdown. Bear flag, next move is breakdown to the 200. Oats certainly looks like the top is in there. Then we look at corn. Traders, look at the corn coming to the end of the life of our pennant. See this blue line? You know how many times we've bounced off this blue line? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bounces off the blue line. The 11th bounce is going to give you an arrow that looks like that, right towards the 200 ball moving average. It's doubtful we're going towards the upside because we are below OATMA and we're about to break this diving board, if you will. Think of a diver bouncing on that diving board. Looks like the diving board effect to me, buddy. We are going down, and that's what I'm expecting out of the corn market. Then we look at the December wheat. If you recall, traders, we thought at first this was a big bull flag when it was about out to here. Okay, that would make sense. Now that it's grown all the way to here, it couldn't be a bull flag. This is merely a parallel channel, and every time you hit the top of that parallel channel, it seems to have a big down day. Top of the channel, big down day. Where are we on Friday? Top of the channel. What do we expect? Big down day on Monday. That we're just playing what happens over and over again. Repetitive patterns, right? So the wheat looks basically giveaway. Thank you, repetitive patterns. Thank you, technical analysis. Then we look at the dollar index, which is making these grains so heavy. Look at the run in the dollar index and look at the inverted head and shoulders. This, my friends, is important, so watch. It's an upside down head and shoulders, right? We all know about the classic head and shoulders where it looks more like the charts like this and it goes up here and back down there, and that's a shoulder, a man's head maybe, and another shoulder. So we know the classic head and shoulders, which is bearish. This is called an inverted head and shoulders. The head is below the shoulders, which is bullish. Since the inverted head and shoulders, we've gone up and we're about to challenge the 200 bar moving average. And it is all about the 200 bar moving average in this video and in the last few days trading, as will be Monday. So, you see the inverted head and shoulders? Here's why it's important. The dollar index, what did it do after the inverted? It rallied up. Look at the VIX, traders. The VIX is the volatility index. Basically shows you the fear factor on the street. Do they think the stock market's going to crash? If so, they buy the VIX. Do they think the stock market's going to rally? If so, they sell the VIX. Now, I showed you a classic head and shoulder, shoulder, head, shoulder, and it broke down just like the arrow indicates. You had your shoulder, your head, your shoulder, and it went down as it should. Now, we had a little inverted head and shoulders, the opposite right here, the inverted, and it went up. Then the market created another one, shoulder, head, shoulder, and we're just coming out of it for Monday. The likelihood is these question marks get answered with a yes. You see how the inverted head and shoulders makes you go higher? You saw what happened in dollar index. The VIX has an inverted head and shoulders. That basically makes the case for bonds continuing higher. You seen what happened to our wonderful topping pattern that we thought we had for months on end? You had a head and shoulders topping pattern, the rounded top. We stayed below OATMA for all of this time, but it blew out after the president got elected and negated our bond story. So if the bonds will continue higher, we think the NASDAQ is going to go lower for a little while. The dollar moving up and the bonds moving up means you are going to see a pullback in your indices, and it's all about the 200 bar moving average, right? NASDAQ daily, shoulder, head, shoulder, which is bearish. You break down into a bear flag, which is bearish. You get below the 200 bar moving average. A leader gets below the 200 bar moving average, and look what happens, right? That's a leader. Next, Russell 2000, another leader, gets below the 200 bar moving average, and this is what happens next. A leader. Dow Transportation Average, another leader, gets below the 200 bar, and this is what happens next. It is a leader. Dow Jones Industrial Average, it doesn't even lead, it follows the rest of the markets, and it is below the 200 bar moving average. That takes me to the S&P, what we all want to trade tomorrow. It has not gotten below the 200 yet, but it is a follower. It is not a leader. S&P follows. The follower almost has to breach the 200. You see the logic there? It almost couldn't not go through. So you got to think bearish, even though I looked at the charts the way many other OMNIacs must have looked at the charts today on Sunday, and you can see a case for the upside in NASDAQ and S&P. But the more I looked at all the charts that surround the S&P, I said, it can't. It possibly can't. The analysis points lower. Then you have the euro. Euro looking very bearish. Euro broke down through an apex, broke down through the 200 bar moving average, now has gotten down through major support and has traded down to here on Friday. It's Sunday night for Monday. Another market that if this is bearish, so is S&P. Another reason to prove our technical point that S&P looks like it wants to go lower on Monday. So you've got the story. The grains look like they certainly have topped. Maybe wheat's going to join in now. Grains we expect to go lower. And it's all about the 200 bar moving average, traders. Do your homework and pull your own charts. So traders, you've seen the charts, and there is our technical argument for why it's all about the 200 bar moving average, why the red omni, no matter what you think it looks like very short term, like a few moments, if you stretch it out for a day or a week, you can't get bullish until you hold the 200, and it's not likely that you'll hold the 200 on the follower ES because everything else has already gotten under it. And, you know, it can't, the weight, it's not going to keep the rest of the markets up by itself. It is a follower. It's likely going to follow its leaders down through the 200 bar moving average. And as you can see, great call by Omni right on the soybeans and the oats, and it looks like it's going to continue. We have bear flag syndrome in those oats, so stay tuned. Come on down to livewithoscar.com. Don't be afraid. I have live chat rooms that are free. I am there in those chat rooms to help you become better Omniacs, become better analysts, hopefully make you become better traders. Come on down to livewithoscar.com. Remember to keep your emotions out of trading. You got to know a stop is your best friend. And always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yo, watch out for the bear flag syndrome in the oats. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.